On today's episode, we are going to take a closer look at two software companies that deal in the semiconductor market, and that is going to be Synopsys and Cadence. I do want to say these are pretty interesting, right? Because this is the ability to get into the semiconductor market or get some exposure into the semiconductor space without seeing that risk that comes with a lot of semiconductor companies that deal with like consumer inventory correction that we're seeing right now. So Synopsys and Cadence, for those that are not familiar, they're very strong competitors against each other, and they have software solutions that are used for the design process of semiconductor. So let's say I am designing a chip, so I'm most likely going to be using Synopsys or Cadence for that chip design process. And I think what's pretty interesting here is right now we are in this trend where semiconductor companies are not the only ones designing chips, right? We are seeing big tech also focus in the kind of silicon solution. Amazon designs their own chip, Google designs their own chip, Microsoft designs their own chip, and all these other players are designing their own chips. So we can see how there's a nice bullish trend for companies like Synopsys and Cadence. If we take a closer look, year to date, Synopsys is up roughly 40% with a market cap of 68 billion. Cadence has a very similar market cap of roughly 65 billion, and year to date the stock is up 48%. So I mean, pretty much what these two companies have are solutions, like I mentioned, software solutions to overall help in the chip design process. They have the software solutions. They also offer some hardware, some engineer services, and also reusable IC design blocks, which are usually known as intellectual property IP. In the chip design process, there are certain kind of functions, you would want to say, that have become a stable, and a Cadence and Synopsys have both kind of created these pre-designed and verified these pre-designed circuit blocks. So let's say if I was a chip designer, I don't have to start everything from scratch. Maybe there might be a function that Synopsys or Cadence might have. I could either pay maybe a licensing fee, or can probably pay maybe an upfront cost for that building block itself. So pretty interesting. It kind of helps speed up the overall chip design process. Pretty interesting for Cadence, right? Most recently in 2022, they did purchase a company called OpenEye Scientific Software, which is a leading provider of computation molecular modeling and simulation software used by the pharmaceutical and biotech companies for drug discovery. So we can definitely see how this company is maybe trying to expand a little bit outside of just your circuit design, simulation, and software, and kind of entering into other markets as well. They also purchased a company called FFG, which is Future Facilities, which helps kind of does analysis in electronic coolings and energy performance for data center, a very, very important task, and a very big problem that we're seeing right now with data centers in form of cooling and energy performance. Cadence pretty much has five main product segments: custom IC design and simulations, digital IC design and sign-off, functional verification, system design and analysis, and IP. Most of those are usually software solutions. The IP might be more of just like we saw that intellectual property, but we are going to see the overall margins for a company like this is very, very high because most of these products are software solutions to some extent. If we take a closer look at their most recent 2022 full-year revenue, was roughly $3.6 billion in revenue. Most of it comes from product and maintenance. Those are a lot of those software solutions. Roughly, I want to say 90%, 94% comes from product and maintenances, 6% comes from services. Now, if we take a closer look at that revenue breakdown in more kind of product category, we can see a good portion comes from just the overall software solutions: 22% custom IC design, 28% digital IC design, 26% functional verification, including emulations and prototyping, and 12% system design and analysis, and only 12% comes from IP. And I do believe this is pretty important because I do believe this is one of the main reasons Cadence might have a little higher margins than Synopsys, because I do believe most of their solutions are a little bit more based on the software market.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Now, if we take a closer look at Synopsys, very similar. They are a global leader in EDA, electronic design automation software that engineers use to design and test integrated chips. Very similar, right? They offer semiconductor intellectual property products, which are pre designed circuits that engineers use as components of larger chips designs rather than designing those circuits themselves. They also provide software and hardware used to validate the electronic systems that incorporate chips and the softwares that run on them. To complement these offerings, they also provide technical services and support to help their customers develop advanced chips and electronic systems. These products and services are part of semiconductor system and design segment. Outside of that, they also are a leading provider of software tools and services that improve the security, quality, and compliance of software in a wide variety of industries, including electronics, financial services, automotive, medicine, energy, and industrials. These tools and services are part of their software integrity segment. And here, if we take a closer look at their revenue product category by for fiscal 2022, we can see 51% comes from their EDA, so that's a nice high software market with reoccurring revenue, high margins. 39% comes from IP and system integration, 9 comes from software integrity, and the rest comes from other. So now that we know kind of a top level overview of both Cadence and Synopsys, I wanted to take a closer look at certain metrics. First, let's start off with PE ratio. So PE ratio for Cadence currently is sitting at 76. For Synopsys is sitting closer to 75.3. So both these companies trade at very similar trailing 12 months PE ratio. If we take a closer look at forward 1 year, the kind of situation looks very similar as well. They are trading very similar to each other, where Cadence is 41.26, Synopsys is 36.34. So right now we do see that the market might be paying a little bit more for Cadence opposed to Synopsys. So maybe there might be a buying opportunity for Synopsys. If we take a closer look, I also wanted to see revenue growth for both these players. If we can see Cadence in the most current fiscal year is expected to be $4.05 billion. The next year is expected to grow by roughly 10%, and the year after that, another 10% or so. Synopsys is expected to grow at probably similar levels, maybe a little bit, maybe a percentage point higher than Cadence, but we can see both of them are growing at very similar rates. We can see Synopsys is also one that makes a lot more revenue than Cadence, roughly $1.8 billion more compared to Cadence. They expect $5.8 billion at the end of this current fiscal year. But when we take a closer look at margins, things start to look a little bit different. Cadence has a roughly gross profit margins of roughly 89%, while Synopsys gross profit margins is roughly 79%. So we can see right off the bat, Cadence is a little bit leaner. They probably have a lot more software solutions with higher margins. If we take a closer look at profit margins for Cadence are roughly 23%, while for Synopsys, they're roughly 17%. So I do want to say it's pretty interesting. Both of them are in very similar markets, but do hit different kind of margins. At the end of the day, we also see Synopsys probably growing a little bit faster and being a little bit bigger in the overall total revenue. Now, if we take a closer look at kind of their balance sheets, both companies are super positive in cash flow from operations. Cadence roughly $1.2 billion in trailing 12 months, where Synopsys comes a little bit higher at $1.7 billion. Both companies have a nice amount of cash and short-term investments. Cadence has roughly $900 million, while Synopsys has roughly $1.7 billion. So we can see Synopsys definitely has a little bit more cash at hand. They also are a little bit more cash flow from operations positive, and they have a lot less debt. Pretty much Synopsys has zero debt to their name, while Cadence has roughly $700 million. So while I look at this sometimes, especially at their forward PE ratio, I start to question, why does the market have Cadence a little bit more valuation than Synopsys? I think Synopsys is looking better financially in forms of in forms of cash flow, in forms of cash, in forms of total long-term debt. They're also growing at a faster rate, so Synopsys is definitely looking a little bit more attractive. A few other things I wanted to take a closer look at is more kind of the stock buyback, stock-based compensation, average diluted shares outstanding, and things look very similar, right? Both these companies are doing buybacks in trailing 12 months. It seems like Synopsys is kind of accelerating at a faster rate, but both companies are spending roughly the same money in the trailing 12 months on buyback, so that's great news. It does seem, though, that Synopsys has used a lot more money on stock based compensation opposed to Cadence. Cadence has kind of been more of a flat line where Synopsys has kind of uptrended over the past 3 years or so. So that's something to keep in mind out. But on the great news, both companies are reducing their average diluted shares outstanding. So overall, I do want to say both companies are pretty interesting. Both are really trading at a high valuation to some extent, even when we look at forward 1 year PE ratio. But in my opinion, both companies do have great opportunities. If I had to choose one over the other, I think I personally would pick Synopsys right now based on that higher growth opportunity, based on that better balance sheet, in my opinion, based on that better cash flow, and based on that less total debt. But like I mentioned, right now we are in this great market in the semiconductor space where not only semiconductor companies are designing semiconductor chips, we have big tech giants continue to innovate and release more solutions in house, which I do believe is going to be a nice growth opportunity for companies like Cadence and Synopsys. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.